Morning everybody, welcome to Stockradar Stocks on the Move. Today's date is the 13th of July 2023, coming to you from the snow this week, having a nice week up here, a bit of fresh air, always does you good. Cool heads make cool decisions, a bit of my motto, my mantra. It's always true, but especially at the moment when the market's been a little bit sideways, a bit choppy, and people are a bit sort of, uncertain and nervous. But the market has been frustrating us for a while with lack of opportunities. But it is time to remain cool and patient. Things will change as they always do in the end. The market has been steady rotating around 7,000 at the moment, characterised by a lack of selling, which has been a good thing, I think, as far as I'm concerned. So I'll have a look at the ASX 200 chart shortly, and that'll help put you in the picture for that. So today I want to focus on another sector. Last week was the insurers, and this week with some attraction has been towards the builders at the moment. So there's receiving a bit of buying, which has been quite a good sign actually, I think. So the market is not totally devoid of opportunities. They're just a bit sparse as this rotation continues at the moment. It will end at some stage. We just have to maintain our poise at the moment. So while we stay cool and patient, apart from targeting those few stocks on the move, spend some time educating yourself. Blogs, YouTube videos, newsletters, chronicles, the portfolio management are all portals to the Stockradar educational website, guiding you on the use of price analysis, trading, psychology, risk management, and portfolio management, and all the aspects that we need to understand when we're trading and running a portfolio of stocks. So this week's I'm coming from the snow. Next week there'll be no video. I'm going to have a shoulder operation next week, so I'll probably be out of action for a week, but hopefully be back on board the week after that. Okay, so now let's get to our top 10 trend intensity ratings for the week. Okay, firstly we have a few ETFs in there, ACDC, which is the battery tech lithium one, which is obviously very strong because the tech market in the US is very strong. We've got a few of those stocks, a bit of a smattering, AGL, a few builders in there, CSR, JHS, Insurer, IAG. We've also got Brambles, which is an odd one in there, and of course those FANG stocks, Japan Hedged, and the Quality International Quality one as well. So there's a few ETFs in there and a few stocks in there for you at the moment. And you can see James Hardie in the picture over there. It's one of those builders that's been had a huge correction there for a long time as the American market took a big dive, but it's now recovering quite well, and it's now starting to develop a nice little trend. We might have a little bit of a closer look at that one a bit later on. Okay, so firstly, let's go to the markets. And the Dow Jones Industrial Average, I'll just go back to that. Dow Jones Industrial Average, as you can see, really we're not far from the highs, and we're just banging on this door at the moment, trying to get through it with this small uptrend here. A good resilience. The green bars give me confidence. The momentum index is just there, a steady move higher, but we just can't seem to get through this pressure. Maybe that these new inflation figures might kick off a bit of demand again. We're going to see a good market today in our market. So, it's possible. But if we start to break through these levels, it will be a very, very good sign indeed. Now, the S&P and the Nasdaq, and we know, are already doing it. They're already trending at the moment. That's the S&P there. The Nasdaq, still a clear trend, has broken resistance, all looking good. So we're in that stage where we're sort of uncertain. If we were living in America, it might be a bit different. But we're still here, and our ASX 200 is really not doing a lot, a bit like the Dow. But those S&P and Nasdaq stock markets look very strong, especially when we look at this huge volume and great momentum there. So they're quite good, those indices there. So again, I'm quietly confident we're going to see something happen shortly. On the commodity front, well, there's a little bit of movement last night. We've seen the oil market recover a bit. Copper's really done very little, and I'm not really seeing a great sign of anything here at the moment. Everything seems pretty neutral and flat for copper, so I'm not really looking at that much there. Gold is just hovering below that resistance. It's not going down, nor is it going up at the moment. So again, it's just teasing it with what's going on, but we've lost most of our gold stocks as that has happened. Brent crude, again, it's finally it's showing signs that's now held this support that's been banging on for quite a while down here based on Brent at around $73 US dollars. It's now probably starting to challenge the upside because it can't seem to break down. What markets normally do is they can't break down, they turn around and they challenge the next area, which is the upside. So now we're going to see a bit of a challenge, maybe these lows here, the downtrend line, and a bit of an average here. And as they move through this area, which is not far away, could signal a bit of a recovery there. So, but for the moment, the trend is down, support is holding, and we're just having a little bit of movement to the upside there. Okay, the S&P 200, our old friend. Okay, let's just have a good look at this for a second, because this is quite what's been happening here. Really, since February 2000. The market was at 7,000 just before the COVID crash, and in July 2000 we were at 7,000. We're a bit above there today, not too much, but really the market has been pretty directionless apart from this fear-driven COVID thing, which we recovered from pretty quickly when that fear hits the market. They usually recover quickly from those fear-driven crashes. But we've really been directionless for about 2.5 years now, so that's a long time. And it's not hurting our portfolios, but we're not really making a lot of money at the moment. We're just hanging on to what we've got, but we sort of have to wait for that the trending period, which is where we really make our money. So in these stages here, it's about capital preservation. And when the markets trend, that's when we have our exposure. That's when we make our money. So I'm looking forward to that when it happens. For the moment, we've still got a little small downtrend here on a weekly basis. We're holding support here. We've got some high levels of buying going on here. So again, we're still in that difficult stage, and we're not too sure. And the momentum really is neutral, and it's at 7,000 points, which we've been rotating around for the last few years. It's understandable that the momentum rating is neutral at the moment. Okay, so that's the ASX 200. We can now go and have a look at portfolios. Well, firstly, the stock pick count is down 2 to 42 of 183. So that's 32 stocks of 160. Breadth is bad. Okay, we know that. The leaders aren't doing much. There's a few stocks out there, a few insurers, a few builders, a smattering of other stocks that are doing okay. Some of those tech stocks like WiseTech. So there are some good ones there, but not a lot. Most of the market is going down. So I guess to a certain extent that means there's going to be some good opportunities that will come when this market does pick up. So that's where we are with the stock pick update. It's not healthy at the moment. It's uncertain, and there's not a lot of stock picks at the moment, but the ones that are going well. So that's the stock pick count. The portfolio update shows us here the conservative is still at 8 out of 20. That's an encouraging sign to me. Whereas the other ones, the Energizer portfolios, have all lost a few. The Energizer 5 stocks since inception, our big long benchmark one, doing 16.6 CAGR, only has 3 there. The Energizer 10 stock has 7 out of 10. The Energizer 5 stock we started in August 20, 3 out of 5, as in the one at March 21, 3 out of 5. The reason we've lost those, that they're not full, is we haven't had hardly any entries recently. We've had a few fallouts, but no new entries. So there's room to add a few when the new entries come on board. So again, the whole situation, as you can see, is a bit of a standoff, and this is where we really need to try not get frustrated, but just try and hang on to our poise and keep our control. Okay, so that is the stock pick update. So now I want to get into some stocks themselves, and I promise you I'm going to look at some of these builders. So first off, we can look at CSR. Okay, now it's been an interesting stock. Some call it boring, some call it uninteresting, but however, the stock is going up and has done for some time now. Okay, so let's have a look at the chart. We're going to look at some of these builders here. We had a good trend reversal back here. So we have been long in this stock for quite some time, but it has been, it's been pretty jumpy. The stop hasn't been triggered, and finally we're now starting to get some movement. And I'm not too sure what the market's doing today, but hopefully we're getting a bit more movement to the upside. Because if we can clear above this level again this week and hold above it, that's a really good sign and puts R1 right in the target zone for us. So it's grinding its way higher. We've got a good trend reversal here. And above this level here, which is around about 530, 540, it gets pretty interesting and targets R1. Trend intensity rating is +9. We're seeing some buying starting to develop here after this selling here, which hit the market. The buyers have come back, and momentum index is just positive, without going wildly out, without going crazy, because the market has been going sort of chopping sideways with an upward bias. So it does look interesting, CSR, at the moment. The next one I want to look at, well, we looked at James Hardie before. It's also looking pretty interesting. And it had a huge collapse from about $57, $58 down to around 25. So that was a huge drop with the American market, but it's now recovering. We've got a new entry on this stock a while ago. We've had some beautiful buying here. Momentum's back on board. So a new trend is unfolding here, which is a very good sign. Trend intensity rating is +8 for James Hardie, so that's a goodie. Okay, the other one here we look at is Boral. Let me just zoom this one up a little bit. Okay, so it's not looking too bad. Boral, we've had a good entry back here around just above $3. Back in January, it's risen pretty well. We've had a correction here. We've had another correction here. Now this may well be starting to break out like CSR, which is a really good sign. And so this trend begins here. It's unfolding nicely. It's, you know, momentum index is pure. It's been positive, which means the trend is steady more than anything. As it remains above zero and goes sort of sideways, that just means a steady rise, a steady acceleration, or no acceleration but steady rise. And there's been a bit of volume come through here. We've certainly seen some selling evident here, a few red bars, but the market has held. And as you know, I love that sort of thing. It shows me that's a good sign that the buyers are being resilient. So Boral may well be back on the up for the moment now. Well, it has been for quite a while. It is looking pretty good again. The next one I want to go to is Brickworks, which is also a very interesting one here. And this will be a very interesting week we have with Brickworks because for the moment, it has made a new high and it's really looked like it was just thumping down. All of a sudden the sellers hit it. It was a beautiful looking break to new highs here. We had a good rally up here, good volume, good momentum. Then suddenly the sellers hit this. Now our stop hasn't gone off. We'll see where we are at the end of the week, see what happens today. It may get a bit more support today, and the buyers may come back and buy this one up again. So for the moment, Brickworks, we're just a bit wary of this one, a bit careful of this new high. Sometimes they work, sometimes they don't. So when a new high happens like this, we get the potential of this to happen right up here, or else we just cut out if this happens. So limit your loss and run your profit in these situations. That's what a new high does. But don't ever sort of get wedded to it, the fact that it's made a new high and it is always going to go higher, because sometimes they don't. And we need to make sure we minimise any loss situation there. So we'll be doing that. The sector looks pretty good. Brickworks is just having a little bit of a struggle there. I'm not too sure what happened there the last couple of weeks, but the sellers have certainly knocked it on the head a bit. Okay, now, next one we want to look at is one that's been out of favour for a long, long time, but is now starting to look pretty interesting, which is a stock called Fletcher Building. Okay, now, we had a very good run on this one a long time ago, great run back here, when the market ran up to 2021, 2022, we then came back down again with no uncertain terms, so we had our stop up here nicely in place because you never know what's going to happen, and we don't want to ever be stuck in these situations where we're falling every week like it did. So it collapsed pretty badly after that big trend. Strange as it may seem, stocks go up, stocks go down, it's the way it works. Now we've got our stock cycle, remember, uptrend, distribution, downtrend, accumulation, uptrend. We're getting an accumulation phase now, a long accumulation phase for over a year, which looks really nice. Been very good support down here at around $4, and we see some heavy selling drove this price almost through here. It did go through, but certainly the buyers came straight back in and have bid this one straight back up to this high up here. Now we're at an interesting stage, because if Fletcher Building can get through this point here, which is around $5, then we're looking at a potential trend reversal, and once again we'll be targeting a level like the next main resistance level, which would be up around R1 or $7.50. Okay, trend intensity rating is +2 because we're still neutral in the stock. However, we have the market is above the average, the buying is good, and momentum is just starting to pop above zero. So all the stars are starting to align on this one, which is what we like. So that's probably my sort of, not my favourite stock. I don't have favourite stocks, but it's a stock that looks really good to me at the moment. We've had that beautiful accumulation phase, and now we're seeing some nice fresh buying on that. And that whole sector, the building sector, apart from Brickworks, all is looking quite nice. Okay, so that's sort of one to focus on for the moment, and I think it's a really interesting area because, you know, the market's not so bad, and we talk about these builders going off, that's a pretty good sign for the economy. So, you know, it's an encouragement for me to see this sort of thing happening. So that's the builders. Now, so that's really the builders there. There's probably about 3 or 4 really good new prospects there on Stockradar at the moment as far as trend reversals go. Most of those stocks you saw there were JXX, BLD, and FBU and CSR were all trend reversals. Brickworks was a different one, it was a new high. But I've got some good prospects on the Stockradar for some trend reversals occurring at the moment. So you have to look out for that on Stockradar. Now for new highs, there's not a hell of a lot of new highs because the market's come down so far and a lot of these stocks have been weak. But WiseTech is one, and again, you know, it chops about a bit and we think it have a down week and we think that's it. Well, we just watch where our stop is, because where our stop is, it tells us what to do. Okay, and at the moment our stop is intact, and I would think, and I don't know, but I would think this stock is probably up again today because the market was pretty strong. We had an excellent new high signal back here. This is our second setup, apart from our trend reversal, which is our first setup. And we had good break of resistance, we had good volume, we had good momentum, everything was positive and it was above the average. So we would have had a trend intensity rating of around +10 when it kicked off on this market. Currently around trend intensity rating at +8. We've had a bit of a choppy movement for the last few weeks, but still there is still very strong demand for WiseTech. So that stock is in an uptrend phase, and we just keep following that with our stop higher, and we've got lots of nice profit to make sure we lock in there and don't let it escape. Okay, then I've got one more stock for you. Okay, well, as far as the new highs go, I've got some really good prospects in Stockradar there. 5 or 6 come straight to mind, which are looking really good. So what you do is you go to Stockradar, you go to the trading centre, you look at the trend intensity ratings, and if you look in the neutral zones, the grey zones, that's where the ones that are about to move higher into that green zone. Okay, so that's where you want to look at if you're looking for some of these opportunities I'm talking about, because there's plenty out there at the moment looking pretty interesting to make some new highs. Okay, so there's more stocks moving the trend intensity ratings if you go to the Stockradar Trading Centre. The other little stock I want to go through today, during the pandemic we had some stocks that got totally overblown as we suddenly thought that online buying was going to be the be-all and end-all, and of course that changes, which is the situation that always occurs. Things don't go on forever. However, Kogan and another stock, Temple & Webster, benefited enormously from the pandemic, and the share prices got completely overblown, and of course they came back down with a thud when they came back down. So if we have a look at Temple & Webster now, you can see where it's been, the uptrend, the huge uptrend back there in 2020, the pandemic. Then we had a huge distribution phase, and then it broke down badly, and we saw a huge drop from $13, $14 down to $3. Now that's not an insignificant one. The reason we have stops in place is because we never want to be involved in this, because these are portfolio killers. When you see a stock drop from, or say $12 where our stop was, down to $3, that's an enormous amount of money to lose, and to get that money back takes an awful lot of money to win back on it. So that's something we just don't want to be involved in. However, we weren't involved in it, we've let it fall, it's now gone through a nice little accumulation phase. Okay, because these stocks are probably quite good, because online buying is back. It is a new era. It is a new thing. You see Myer starting to jump on it. All these retailers are jumping onto this sort of stuff. So Temple & Webster is probably a good stock that's going to benefit from this when the market does kick higher again, and so will Kogan, I would think. But you can have a look at Kogan because it's a similar situation to this one. But Temple & Webster, as you can see here, since May 2022, it's gone through this accumulation phase here. It's held this level down here, just above $3, and it's now starting to threaten this level here up around $5, $6. Okay, so the trend is about to turn up. We've got a downtrend accumulation, then we move into the uptrend phase. The price starts to move above the average. It will break resistance. We haven't got a clear break yet, but keep an eye on it. We're getting some beautiful fresh buying in here, and momentum is starting to turn positive. So we're now getting what I want to call the alignment of the stars. After a 71% drop in price, there is a great opportunity there for a stock like Temple & Webster to have a damn good rally. So keep an eye on that one. It's one it's worth looking at, and as I said before, have a look at the Kogan chart and see if you see any similarities there, because you probably will. Okay, so that's the stocks I wanted to go through for you today. I hope it gives you some insight into some of the things that I'm thinking about at the moment, because there are opportunities. I don't worry about the stocks that are going down, those 140 or so stocks that are going down. They will turn in their time and they will come into my target when they do, but at the moment they're not on my radar. These stocks are on my radar, the ones that are going up. Okay, so that is the charts I want to go through today. Right, so cool heads make cool decisions. It's all about, when markets go through stages, and I've been around for a while, not that I'm that old. I've been through a lot of ups and downs, GFCs, sideways markets, uptrending markets. In every market, you've just got to keep your poise, because you never know what's going to happen next. So you just take things as they come. Don't worry about what the radio says or the television or whatever it is, news reporters, things like that. Just see what you see. And when times like this are happening, you just have to be patient, because when it does break up, it will be a really good move. So it's all about remaining cool in a market that's lacking in opportunities. So stay cool, stay poised. It will all happen again. It's just a difficult thing. It's not going to go on forever, this sideways movement, okay? So patience is an essential trading attribute and a very, very good quality to have when you are trading. So we need to always keep our focus and not try to make things happen that aren't there, okay? There are a few opportunities, not a lot, but there are some, which is good. So be patient and wait for the opportunities as they will come, as they always do. And things don't really change. It's not going to be different this time. It'll be the same this time as it always was. We'll go through this phase. We'll get a new uptrending phase. We'll be able to make some money again. And at the moment, it's just a matter of making sure we keep our money so that we can move on. Okay, nothing really happening at Stockradar. The newsletter was out last week. Hope you've all had a read of that. Plenty of stuff in there for you. So that's about all I've really got for you today. As I said, stay cool. It's really a matter of just sitting there, poised. This guy's just thinking about what's going to happen. He's waiting for his opportunity and it will come. So it's a frustrating market, I know, especially amongst the leaders, as the ASX 200 attests. It's going sideways and ahead for a while. But keep you cool. Things will change and more opportunities will develop as they always do. Stay safe. Watch your trends, heed your stops, give me a call if you need, and I'll see you all next week. Goodbye from the snow. Remember, there won't be a YouTube video next week, but hopefully I'll be fit and healthy enough to do it the following week, provided I've got a couple of alarms working. Okay, thanks for listening, and I'll see you in 2 weeks' time. See ya.